Hello everybody, this is Mike Prey with Keller Williams Realty with your local DFW real estate market update through March 2023 and into April. Actually, we're looking at the first quarter statistics against projections, and we're noticing that the market is not behaving as projected. The projections came out at the beginning of the year, and the expectation was that the prices would drop somewhat and maybe even precipitously, depending on who you were talking to. We also heard that the interest rates would be continuing to rise dramatically and maybe peg out at 7 or above, and we might get some relief at the end of the year. We also heard some talk about a bubble similar to what happened in 2008, and that we might be looking at a complete market crash. Well, as we look at the statistics and what's actually happening, we're not really seeing any of that. And in fact, we're seeing some to just the opposite. So when we talk about the real estate prices, what we've seen is that our real estate prices on average for the quarter tend to be trending up at a rate of about 3.75%, an annual rate of 3.75%. And this is basically in line with what we used to see prior to COVID and all the craziness of the post-COVID period up till the end of last year, where we saw some double digit. It cooled down to about 4.8% last year. Prior to that, it was between 4 and 6% appreciation on a pretty regular basis, and that's pretty standard for our area. And so we're seeing something like that, about like that happen, maybe a little bit less, but we're not seeing the prices drop. And so if that's something that folks are waiting for, it reminds me of a saying that investors have, that it's important not to try to time the market, but to have time in the market. And what that means is the expectation is, and the history shows, that real estate will appreciate over time. In fact, historically, real estate doubles in value every 20 years. And that, can change in spurts and starts along the way, but that's the trend that real estate goes, which is what makes it such a great investment. So what does that mean to you? Well, let's talk about a few statistics that happened in March, so you can kind of see where we are at this point. Homes closed in March was up 16.7%. That was reflective of an increase, actually seasonal increase in activity, which is going to continue to pick up here as we go into the spring and into the summer. That's flat from last year at this time. The median sales price was up 3.4%, as I mentioned before. That's a fairly moderate increase. It was at $420,000 at the end of March. For the year, that was up 0.59%. Last year at this time, median sales prices were at $417,500. And that's a fairly moderate increase, but it's showing a continued increase. The days on the market were down from last month. Last month they were at 100 days to get a home under contract. They're down 23 days at 77 days, so it's still taking a little longer. The market has cooled in so far as people making decisions and deciding what they're going to do. It's up 67 days from last year at this time. The average days on market was 10. And remember, this was pre-interest rate rising, and so we were still looking at a market similar to what was happening in 2021 this time last year. Available inventory is up. That continues to increase a little bit. It's up 10.6%. So our level of inventory is rising, but it's still historically very low at 2.11 months of inventory. Remember, a regular stable market is 6 months of inventory, so there's a lot less inventory than there are people out there looking for homes. New listings were up, and that's seasonal, by 75.5%. last year at this time, it was not last year, but last year at this time, new listings were up a little over 80%. So we're still behind last year's pace, but we're starting to see a few more homes come out on the market. The mortgage interest rate, as I mentioned, ended the month at 6.32%. We saw 6.13 at the end of January, 6.5 at the end of February. We had the interest rate spike to almost 7% again in March, but then it went back down and finished the month at 6.32%. So like I said, the interest rate is volatile. Showings were down about 1% from this time last month, but they're way down from last year, 68.41%. And that is really, once again, a function of the interest rates. The interest rates popped up, almost doubled from this time last year, at least 1 or 2%. And so we're just seeing people be pushed to different price points, standing back and revisiting and re-preparing to enter back into the market. But there are, according to national statistics, depending on who you look at, 1.5 to 5 million more people looking for homes than there are homes for them to purchase. So demand is still very strong, and people are working out ways to buy and sell real estate. If you're a buyer right now, it's difficult, as I said before, to time the market, and that's not where you make your money anyway. You want to try to get into the market, and the best thing to do, or my advice, would be to get pre-qualified so that you can see what you can do at this point in time. You may be able to do more than you think you can, or you may have to make some preparation to get in the market. But you want to be prepared and following up with your loan officer to take advantage of the opportunities as they come along so that you can get in the market and start realizing some of that appreciation. If you are a seller, it may or may not be a good time for you to sell your home. And that's something that we could evaluate and decide if you can sell your home and go forward with your real estate goals, or if you'd be better to stay in that home. A lot of that has to do with the interest rate that you purchased at and what it is that you want to do. But both buyers and sellers need to really take a look at their real estate goals and not assume that they can't meet them, but find out where they are exactly. If you have a question about your personal real estate goals and the situation that you're in, whether it's a good time for you to buy or sell or pursue those goals, please give me a call at 469-446-0234, or you can email me at mikepray2@gmail.com. If you're on social media, you can message me. I'd be glad to get in contact with you, and we can sit down and take a look at your personal situation and help map out a plan for you that will help you meet your real estate goals. That's all that I have for today. Remember, I'm always available to help, and I look forward to talking. I hope you're getting ready for a wonderful spring and into summer, and I look forward to talking to you next month.